Hi, I'm Ray Meadows, Prince of Finance. With me is my friend Hiromi.
Hi, I'm back.
We haven't done this in more than a year, and it's been way too long.
Too long, yeah.
But we're back. We're going to try and do some new stuff and tell you what's been going on.
Yes.
So you may recall last year Hiromi got to start investing by investing in some bond
Yes.
ETFs.
Yes.
How did your investments do?
I have to laugh. Because I haven't really done anything with it.
You don't have to do anything, remember?
Well, yeah,
you just said you watch it grow.
Okay.
Did it grow?
Yeah. Okay, so my account, well, I didn't touch it. I just left it, and then my graph is like this. So it's good.
That graph is like this.
The graph
Sounds
is just
good.
like going up, so that's good.
That is good.
I did not touch it. I did not take out anything.
Okay. Oh,
So
good.
So it is going up.
Okay, good. That sounds great.
It's good. Just put little money and it's still like
A little money. A little money turns into big money.
I hope so.
Speaking of little and big, so what any concerns with your bond investing these days?
These days, well, well, I heard about inflation lately, right?
Uh-huh.
So, how would that how would I say this? How will higher inflation
Affect your
affect my
investment?
investment? I think?
Yes.
I don't know. Would that affect my investment?
Sort of, because if you think about it, why do we invest, right? Why do you invest?
So I can relax when I'm older.
That's right, but at a more basic level, so you can relax. I love that answer. At a more basic level, so you can consume more stuff later than you otherwise would be able to.
Yes.
Right? But the thing is, inflation changes the price of things, and so it's going up and up. And if your investments don't keep up, then you're actually getting to buy less later than you otherwise would or than you could. So inflation essentially erodes the value that you're getting from investing. So it can be a bad thing for investing. And you should be a little concerned.
What happened? You know?
Well, I mean, because for example, if you're investing in bonds, which is what we have you do, they're paying a fixed interest rate, which is nice because it's safe. And part of the reason that we did that was because you're a new investor and you want to be safe.
Yeah.
But on the other hand, if inflation is exceeding the interest rate, then you're losing money in a way because you can't buy as much later as you could have. So that's a concern.
They can do that?
That's how it works with bonds, unfortunately. So for example, if you bought a bond today, or this is June 2021, if you bought a bond from the government, a 10-year bond would pay about 1.5% per year, right? And you know what inflation was over the last year?
No.
5%. And it's probably going to be at least 2% for the next 10 years. So, if you bought that bond, you would actually be able to have less purchasing power in the future than you have now. So, bonds can be not so good.
So are you saying not buy it now?
There might be some adjustments we want to make.
What?
Depending on, how long you're going to hold it. You definitely wouldn't want to hold a bond paying a very low rate for 10 years right now. Not a good idea.
How do you know, though?
How do you know?
How do you
Because
know?
inflation is higher than 1.5.
Oh, okay. So you have to
Anyway.
look at it.
Yeah, you have to look at what the return is versus what inflation is.
Here you go.
So, but on the other hand, stocks could be a better investment because stocks represent an actual business with real assets, and their money, the money they make, and therefore the value will change with inflation. So, but it's going to depend on the business. So some businesses can raise their prices along with inflation, and that's okay. But their costs may be rising with inflation as well.
Yeah.
So it depends. Did their costs rise higher or their prices rise higher? And if they're both going up the same, then it's kind of a wash. It's okay. At least you don't lose money. But there are some businesses that can't really raise their price for whatever reason, but their costs are going up, so those businesses won't do well. And conversely, there's some businesses that they can raise their price, but their costs don't go up, and they're going to do really well.
Mm-hmm.
So when we're thinking about investing, we got to think about how is inflation impacting the underlying companies that we're dealing with. Now, I might mention one other item, or two others. The corporate tax system actually works such that their taxes go up for corporations as inflation rises. And we don't need to go into the details of that, but it's just not good. And the other thing is, a lot of these high-flying technology companies that are coming out and they're worth a lot of money, they don't actually make any money, and the market is discounting their future, at a low interest rate because rates have been low. But as inflation goes up and interest rates go up, that money they're going to make that's way in the future suddenly becomes a lot less valuable. And so those companies go down in price. So there's a lot of things going on.
All right.
We're going to learn about inflation even more.
We're going to get through this, everyone.
Next time.
Okay. I'll see you next time.